As Russian troops flooded into Ukraine yesterday, Bitcoin crashed hard and dragged the rest of the crypto sector with it. Gold and silver, however, surged. And while we expect this type of reaction from precious metals, many in the market appeared perplexed as to why Bitcoin was not following suit. And although Bitcoin has become synonymous with being a supposed inflation hedge, in its fledgling years, it was more associated with being a crisis hedge. And as Western nations debated placing sanctions on Russia, two interesting things happened. The first was that it became apparent to the market that it would be incredibly difficult for the Fed to raise rates throughout a year defined by open conflict in Europe. Incredibly, stocks closed the day higher. And the second is that just as Bitcoin was approaching the cliff edge, it sprung into life and closed the day up 14% from the lows. Whether or not that represented a surge of Russian capital is unclear, but the timing suggests that it's certainly a valid consideration. The days ahead will be punctuated by misinformation and breakneck markets. Be careful. Safe haven assets have always been considered hedges against market turmoil or currency devaluation. One of the biggest selling points Bitcoin proponents have made is that it could be an even better hedge against inflation or market uncertainty than gold. But how and why?